Despite all the economic headwinds setting us up for a bear market, the TSX, well, it seems to have other plans. Is this bull market for real or are we on borrowed time? Hold on to your seatbelts, folks. This is going to be a good one. Even with all the warning lights flashing in the economy, from a trade war and a mortgage renewal crisis to, well, record levels of household debt, and lately we've got a slumping oil market, the TSX seems to have shrugged it all off, at least for now. Normally, you would expect these economic dark clouds to push us deeper into a bear market, especially with oil having slipped back down to that $65 range. Also, the banks looking at record mortgage renewals at much higher rates. So what exactly is propping up the market? Well, you guys know I'm a fan of gold, and gold has been staying relatively firm as investors look for safety, which is definitely helping to support our mining stocks. And given the TSX, well, it's giving it a little bit of buoyancy. You gotta like it. You gotta like that for sure. Surprisingly, the big banks as well, they've stabilized after all of the concerns about rising loan losses and those loan loss provisions, which, well, it's kind of shoring up broader investor confidence, at least for the time being. Well, there's also quite a bit of excitement around a potential Canada US trade deal. There is also a lot of excitement around a potential Canada US trade deal. And if we can significantly dial back those tariffs, it would be good for the market. And maybe it could keep the bulls running longer. However, it's not all roses, folks. I do think we need to be cautious, as it wouldn't take much to spoil the party. A further drop in the price of oil could significantly add a lot more pressure to the energy sector. And if those banks were to begin to show some cracks, that could undermine investor confidence big time. Also, if we cannot get a resolution to the trade war, that will push us into a recession and more than likely a bear market as well. We know that the bear market is coming, and it does play a role in some of my investment choices for this month. A sub to the channel is the easiest way to enjoy some future content. Let's get into that challenge portfolio. So we're going to start with the stocks that we have not made any changes to in this cycle. So we got Bird Construction, and they've got a total return of 42.73%. Oh boy, they had a fantastic month for sure. And numbers like that, they may be challenging for that GOAT position. We have Scotiabank with a total return of 30.23%. CNR sitting up there at 0.48%. We have Extendicare at 15.37%. And good old Fortis at 23.67% total return. HHIS sitting at 17.46% total return. And we got HMM.A 16.39% total return. You guys keep asking if I still have faith in Hammond. Well, that's why I still have faith in Hammond. We've got Pizza coming in at 18.57% total return. Armax at 4.14% total return. Timber Creek Financial sitting there at 11.98% total return. And XUT coming in at 9.62% total return. These are some very nice looking returns for sure. I'm liking it already. Okay, so let's switch gears and let's take a look at the stocks we have added to this time around. So we'll start with CNQ, Canadian Natural Resources. We bought 5 more, taking us up to 30 in total. And we've got a 2.11% total return on that one. As usual, this is one I will DCA into when they are low, big time. I do love this stock. We have Diversified Royalty. We added 10 more shares, taking ourselves up to 120. And they've got a total return of 23.91%. I'll tell you, I sure am glad I got that buy-in before they exploded later in the month. They had a very good June. We added another 10 shares of a good old Canoe, taking them up to 60, and they're sitting at a 28.34% total return. And we added another 15 shares of the Harvest Bitcoin Leaders Enhanced ETF, taking us up to a total of 70 shares. They're sitting at a 31.92% total return. This is a play that has been working out really well. We also added five more shares of JEPQ, taking them up to 25, and that's a 2.82% total return. We also added five more shares of London Gold, taking us up to a total of 15. And that leaves them at a total return of 49.93%. We did average up with this buy, so it knocked the total return down a wee bit, but is it still high enough to take the GOAT position? We also added five shares of PPLN, our pipeline ETF, and that takes us to 25 shares and a 3.38% total return. We did add 14 more shares to the Purpose Solana ETF. That takes us up to 30 shares in total and a 7.08% total return on that one. And good old T Cash, we did add another seven shares, taking us up to 35 shares in total, and a 0.44% total return on that one. So yeah, we're gonna keep adding to that cash position because when that bear market comes, we want to have a little bit of cash set aside to buy the dips. Yeah, dips, multiple dips. XEG, we added another 10 shares, taking it up to 60, and that's currently sitting at a 2.63% total return. And finally, XST, we added one more for a total of six shares and a 9.01% total return. Normally, at this part, we talk about any kind of rebalancing I did in the portfolio. There was none in June. I did not sell a single thing, so nothing, nada for the rebalancing section. So let's take a look at our new additions for the month. I did only add one new stock this time around, and that is FTG. We picked up 30 shares at $9.60, and they had a good month. They're already up to a total return of 20.31%. So the Farron Technology Group, they're an aerospace and defense play. They make circuit boards and electronics for these systems, which I believe will be in heavy demand as NATO's ramping up their defense spending targets. That's only a good thing for this company for sure. Okay, let's take a quick look at the overall portfolio. June was a strong green month, and in fact, this is the first month in the challenge where every total return, yep, every single one of them was in the green. That's not too shabby for sure. Looking at the numbers, we did add another 500, taking our investment up to $12,000. The community added another $24 for a total of $1,039 thus far. A huge thank you to the community. When all is said and done, that added up to a $13,039 investment for the challenge. We also received $105.77 in dividends for a total of $977.69 to date. That's pretty good. When we add in the dividends and the growth, we get a portfolio value of $18,346.27. Holy banana bread. This was a good month for sure. When all is said and done, the challenge total return came in at a very, very nice 40.70%. That 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 is that's really good. I love that. But like I said, the bear market is coming and we will drop back down a wee bit for sure. Let's take a quick look at the portfolio's diversification with data pulled from the Blossom app. Speaking of Blossom, if you want to check in on the challenge, I do have it uploaded there, and there's a link below to sign up for that app. According to Blossom, our top 7 represented sectors are industrials staying strong at 24%, energy coming in at 18.4%, fixed income still looking pretty big, 12.6%, financials coming in at 10%, utilities 9.8%, materials 8.2%, And real estate bringing up the rear 7.8%. It is time to look at the toad and the goat of the portfolio for the last month. Our top five worst stocks this month are number five, JEPQ with that 2.82% total return. At number four, we have XEG with a 2.63% total return. Number three, CNQ, 2.11% total return. Number two, CNR, 0.48% total return. And our toad of the month is, well, this is interesting. It's the cash ETF. So T-Cash with a total return of 0.44%. Well, let me tell you, when everybody is beating the fixed income play, you gotta love it. You've got to love it. Okay, that bottom was pretty impressive. Let's see who is topping the charts this month. So our top five best stocks are at number five, we got Canoe sitting in there at 28.34%. Number four, Scotiabank sitting in at 30.23%. Number three, HBTE, look at that, 30.92%. Number two, good old Bird Construction. I'm a big fan. I think Bird Construction has some really good days ahead of them, 42.73%. But there's only one top stock. And our go to the month is once again, it's London Gold, 48.93%. Wow. June was just a crazy month. It really, really was. And seeing everything in the green, it's a dream. When I started the challenge, I was thinking, boy, it sure would be good to have a month like that. And yeah, well, finally we do. Finally we do. Um, will we be able to keep everything in the green for next month? That's going to be one of the questions in our next update. Will London Gold? Will they hold on to that top spot? That's going to be another option. Or it's kind of a battle between London Gold and Bird Construction. So we're gonna have to see. We're gonna have to see if they can hold out. So you'll have to tune in to the next episode just to begin. Well, we have one a month. We have one a month. If you are interested in any of the stocks we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on new crypto ETFs. Thank you for watching, and I will see you in the next video.